Hi, how to understand today's stock market? It's so confusing. Try this picture. The market is a crowd of super emotional elephants rushing about with dollars and shares strapped to their backs, on which sit nervous elephant drivers, also known as PMs or portfolio managers. The elephants and their drivers are the institutions who run bazillions of dollars of money, which is not theirs, also known as OPM, other people's money. Both elephants and drivers are allowed to eat every 3 months a little bit of the money they are carrying as fees. But there's a trick. They get fed only if they manage to run faster than the average of all elephants. If they have lagged, the money owners peel some of their cash and give it to the faster elephants. Then the losing elephants and their drivers become skinny and depressed. Some even quit the market, and the drivers get to work at McDonald's or Hooters or the local car wash. Are elephants the only animals in the market? No. Here and there are also wiry, muscular hyenas, purring quietly, waiting for some OPM elephants to die so they can pick the stocks thrown off them and buy them up cheaply. Then they wait some more for other frantic elephants to bid up these stocks. Why would these other elephants bid the stocks up? Because elephants who aren't loaded will soon lag and lose their jobs unless they load up on stocks also. And so they do. Too late eventually, but they do. What's the main difference between hyenas and elephants? It's this. Elephants are agents. Hyenas are principals. The first are fed by the money owners. The second feed themselves. They own their money. How much of the market is composed of elephants? I'd say that more than 90% of the market is OPM, other people's money carried by elephants, i.e. agents. The rest is owned by principals. Now what about the marketplace itself? Let's complete the picture. The market is a room full of stocks, with a big anteroom where the elephants can mill about, drink martinis, and chat to other elephants. When the market is empty, it means the elephants are in cash. Then, by and by, some elephants start tiptoeing into the market to buy some stocks. Why? Maybe they got some tip, or a broker sold them a research report, or maybe some hyenas did. They are already long the stocks and want to sell it to someone less smart, also known as a bag holder. But once this thing happens, the market starts to move, and suddenly some elephants in the anteroom begin to underperform, and some of their money is taken away. And so they start panicking and rush into the market to buy more stocks. But the market has a narrow door. That's a trading volume. So then all elephants who want to rush in together, they get stuck. And then they panic and bid stocks higher because of FOMO, fear of missing out and then losing their job. This factor alone explains a lot about the frequent panics in the market. However, there's also another factor. This factor is an evil witch called Janet. Janet has the magic ability to create new cash out of nothing. Create how? First, she blows on her magic printing press that prints treasury bonds, also called T-bonds, which she sells for cash to her enemy, the Fed chair Jerome, who is also her bureaucratic brother. The new cash she gets, Janet had to her friends, the Democratic governors, and to other organizations engaged in the holy work of getting the president reelected. And what do these friends of Janet do with the cash? You got it. They give it to the elephant's friends to run. Some give it to BlackRock, others to Bridgewaters, others still to Colby Kravitz. Some even give it to the Howard Endowment Fund, which invests in Hamas bonds and other worthy causes. The elephant's problem is the first elephant who puts the new cash to work will get even more cash because he'll be ahead. And then he'll eat better, and so will his driver. So elephants all rush to plow Janet's new cash into stocks and do it fast, the moment they get it, which of course causes a pressure on the market door, as all elephants try to squeeze through together, being stocks higher and higher and higher, also known as extreme FOMO, fear of missing out, which is what you are seeing now. And as I have been telling you since October last year, when all market elephants had lots of cash, only hyena then had stocks, sleuth investors, for example. Remember when I told you not to be a lemming and sell? Oh yes, the lemmings. Every now and then, when the elephants get really depressed, like October last year, they all turn into lemmings, like the mice in a Walt Disney movie, and they all rush over the cliff and they crash all together. The hyenas are, of course, waiting below to strip the elephant carcasses of stocks cheaply. Go see again my video of 2022 when I told you not to be a lemming. I hope you listen. All right, enough about the past. What about now? In my opinion, now is the beginning of the biggest, meanest, baddest FOMO wave you have ever seen in your entire life. Why will it be the biggest and the meanest? Mostly because the witch Janet has panicked. You see, rumors are that Janet's bureaucratic father, the president, has gone missing. Then he was found dancing naked in the White House at night, at which point he was put to bed gently and fed amphetamines and trotted up before tame journalists in the morning to read a speech. But it may not be enough to cheer the voters. So Janet, as a dutiful bureaucratic daughter, does all she can and prints more and more T-bonds. How many? Hold on to your seat. Janet prints $150 to $200 billion worth of T-bonds a month, and pronto sells them to her enemy brother, the Fed chief, also known as Jerome. Now, Jerome is a reluctant buyer because with the interest rates going up, the moment he buys Janet's bonds, they fall in price. But since he wants to keep his job, he buys them, going deeper into debt on all our behalf, and hands the cash to Janet. And with this cash, Janet loads up more elephants via her friends. So the elephants now must pile even more cash into stocks every month. How much in total? It's about $2 trillion cash a year. That's trillion with a T. Is this a lot or is it? Remember in 08-09, the great financial crisis? The total amount printed by Bush Jr. was $800 billion. Barely a single trillion. Piffle. Is it any wonder the market today goes up and up and up? No. It's a wonder it hasn't got up even higher and faster. However, I am fairly confident it very soon will. How high can the market go? I would say it could imitate here the great market rocket climb of 1999 to 2000. And I'm speaking here as a former rocket scientist. In 1999, NASDAQ rose more than 150%, the Dow 50%. Will it be today as much as that? Well, remember, OPM elephants today are fatter, stocks are bigger, but so is the cash being printed via Janet's T-bonds. If I'd have to take a guess, and it's only a guess, I'd say the market here could crash upwards through the S&P all-time high of 48.18 before year-end maybe, or soon thereafter. And once the market does, not if but when, the cha-cha dance of the OPM elephants will turn into rumba. And then as the market keeps going up and up, the dance will become a full-fledged FOMO panic rock and roll. My guess, again, it's a pure guess, is that by Q1 next year or early Q2, the S&P will rush through 6 grand. That's 6,000, by which time all the baby elephants, hedge funds founded by Harvard Hamas cheerleaders and MIT smarty pant quants will be chasing it too, right before the top. In other words, in my opinion, the coming rise will be both historical and hysterical as OPM elephants gore each other to death, plowing Janet's new cash into rocketing stocks. Until when? I would look for 3 signposts off the top. First, when Janet's enemy brother Jerome, who is a mean Boy Scout, says enough is enough, time to kick the OPM elephant in their goolies, and he will raise rates. The second signpost, the second thing likely to happen, is that the president handlers realize there's a little chance he will win because he can't debate, even with amphetamines. And so they'd better burn the polling booth, which means that by that time, some pre-election riots may start, bigger than the January 6th and the BLM riots combined. Or that at least what some of my informers tell me. But third, so I'm told, that another reason Janet prints so many T-bonds. She wants to ruin the US economy before the other presidents who may not be named gets in. And all these top factors, the elephants will sniff out all at the same time, as they usually do. When will they sniff it out? Sometime by Q1 next year, or maybe Q2, when the market is already floating up high there in the clouds yonder, at which point FOMO will come GMO, get me out, and all the elephants together will all become lemmings, just in a Walt Disney movie, and will crash together in wave after wave through the narrow market door down to fair value below, which is what? No, anywhere between 1,200 to 1,400 of the S&P 500. But all this is for the end of next year. Meantime, the market is a moonshot to execute on a rocket powered by Janet's cash. So, I think it's going to be a great ride, although a short and a wild one. How short? A few months? 3, 6? Who knows? And of course, remember, I could be wrong, very wrong. So do your own research and sleuth around with your own informers. Don't just rely on mine. That's all for now. Happy holidays and a happy new year to one and all. And for the holidays, please buy any of my books or all of them. They make excellent gifts, either wrapped under the tree or handed in person to your loved ones. Meantime, please subscribe to the channel and retweet to all your friends and followers that say subscribe to. I'll see you next time. And meantime, thank you very much for watching.